Hi, my name is Anuj Gupta. I'm from Tag Investments, your strategic wealth consultant. Today we're going to talk about mutual funds versus direct stocks. क्या सही है? We've heard the campaign going on mutual funds सही है. Nowadays there is a discussion going on direct stocks सही है. So the big question is mutual funds या direct stocks क्या सही है? Let us get into the discussion. Mutual funds or direct stocks क्या सही है? This presentation is for information purposes only and does not represent any financial or any other advice. Well, why we are discussing about this is if you see in the month of March 2020, the number of cases of corona were less, but the fear of corona was more. And come June 2020, the number of cases of corona actually rose, but the fear of corona dipped. And that is where the Sensex from 25,960 it peaked to 35,000, and now as we speak it is 36, 37,000 Sensex. So the topic of discussion these days is whether it is mutual funds one should invest in or direct stocks. There are a lot of you can say discussions and investors interacting saying that I invested in this stock and I made 50%, I invested in that stock and I made 100%, whereas the mutual fund investors, the SIP investors are anything between 25 to 35% in the last 3 months. Now why this happened we need to understand. So one reason was excess liquidity. So fixed deposits money, the interest rates have gone down drastically. Now anybody who invests in FDs, their money will double in say 13 to 14 years at the rate of 5.5, 6%. There are few wealth creators. One is if you invest in business. So what the businessmen are doing, they are also scared and skeptical about investing in their businesses in these uncertain times. So the excess cash which they have, that is also again coming into the stock markets. Second is the property. Property, there are liquidity constraints, and again investors sitting high on cash instead of investing in property, the money is again coming to the stock markets. And third is equity. So that is where the money is coming into. And that is why we see this graph from 25,000 to 36, 37,000. Now what happened actually is if you compare with June 2018, say Jan 2018 when the Sensex peaked to 34,433 and Jan 2020, it again peaked to 42,278. But if you just have a look at this small cap and mid cap, it peaked out in 2018, but in Jan 2020, it did not peak out. However, in the last 3 months, what we are seeing is a broad-based rally where we have seen small cap and mid cap stocks also participating in the rally. To understand this deeper, if we talk about the market cap in Jan 2020, it was 160 lakh crores. In March, it was 102 lakh crores. In June, it was 141 lakh crores. Now, as an investor, one is confused what he should be doing in terms of investing in markets, whether it's mutual funds or direct stocks. So one should understand the rules of the game, rules of the market. So to understand the rules of the market, one needs to understand what are types of market. So one is the trending market, second is a directionless market, and third is a volatile market. Today, as we speak, we are into a volatile market. Also, one needs to understand that one doesn't make money every time from the stock market. So this is a history of 25, 26 years. All the years shown in red are the times when investors did not make money, and all the blue and green years shown are the years when investors did make money. So what we are talking about is 2021, 2022 and 2023. Are they going to be red, blue or green zones? Also, the rule of equity investing speaks about one should understand the investment strategies. One is the value strategy, second is the growth strategy, third is the contrarian strategy, fourth is the quality strategy, and fifth is a quantitative strategy. One should understand the technical fundamental parameters before investing into stocks. Also, one should understand about the investment process. The businesses one is investing in, you should understand that business. Does it have a favorable long-term economics attached to it? Does it have a margin of safety attached to it? Are the management trustworthy? The promoters, are they trustworthy and able enough to actually drive the business forward? To understand further, there are various types of asset classes. One is the wealth preservers, where we talk about gold, fixed income insurances, and second is the wealth creators, where we talk about equity. Within equity domain, we talk about passive investing and active investing. So passive investing is all about investing in mutual funds, PMS, model portfolio, and active investing is actually investing directly into the stock market. The Sensex chart, if we see in 1992, 2000, 2008, 2020, these were the peaks. What are we talking about is 2030, what is going to be the next peak. So the next one decade, 2020 to 2030, is going to be a wonderful decade as far as investing is concerned. So you have to make a choice as to where you would be making the bet. One is direct stocks and second is mutual funds. So one should not get excited in terms of when we talk about, say, 2030 is going to make a new high, and you get excited and enter into any stocks. So a lot of planning, a lot of asset allocation strategies needs to be defined before you actually invest in stocks. Nevertheless, when we're talking about the stock market, it doesn't mean that the mutual funds did not perform well. If you look at this chart from March till July, uh, almost all categories gave you a 20, 25, 30, 35% returns, which means that even mutual funds as an investment asset class did give investors returns. However, where the confusion comes is because of lately, when we were talking about mutual funds and stocks, one of my friends, investors, uh, happened to tell me that he was sitting with another friend of his over a lunch meeting, and they happened to discuss that one was a SIP investor and the second was a direct stock investor. So his friend told him that he's made almost 70 to 80% in a particular stock in the last 3 months. So much to his surprise, whereas in SIP he did not make that much money, as we just saw this table. So he would have made anything between 25 to 35% returns. And then in the evening he happened to meet another set of friends. Then they again happened to have this discussion about mutual funds and stocks. So those friends also told him that they are making good money in stocks and they are using their mobile trading app in terms of stock investing, and they have made a healthy gain of 50 to 100%. And that is where the investor gets confused, who is a mutual fund SIP investor, that should he be quitting from mutual funds and SIP and entering into the stock market. So, well, the answer is clear. In case if you are ready to understand the rules of the game in terms of the equity market, the fundamental analysis, the technical analysis, and we spoke about uh, various other parameters in terms of types of investment strategies, the investment processes. If you are able to drill down into all these details before investing into stocks, then yes, welcome to the stock market. And in case if you feel that these are too many things to take care of, then म्यूचुअल फंड सही थे, म्यूचुअल फंड सही हैं, एंड म्यूचुअल फंड सही रहेंगे. सो प्लीज़ अंडरस्टैंड दैट देयर इज़ नथिंग कॉल्ड एज म्यूचुअल फंड सही है या डायरेक्ट स्टॉक सही है, दोनों सही हैं. सो इफ़ यू वर टू टेक माई take on it, if you have 25 lakh rupees to invest, 10 lakhs to be invested in direct stocks and 15 lakhs to be invested in mutual funds. Out of the 10 lakhs, you need to create a good bucket or basket of stocks which are going to be performers in the next 3, 5, 10 years. As to how to select those stocks, I've already made some videos earlier as to how you can do stock selection, so please refer to that video. In case if you want to know more about stock investing, you can get in touch with any of our team members and we'll be happy to support you. So that is it about mutual funds या डायरेक्ट स्टॉक्स क्या सही है. दोनों सही हैं. Do proper planning, do right asset allocation, and just sit tight and you will make money. Ramdev Agarwal says you need stomach and not brains to make money, and that is true. So just sit tight and you will make money with proper planning and right asset allocation in your investment kitty, and you're bound to make money in the times to come. The next one decade looks very, very promising to us. We also would like to thank NBT for this presentation, who helped us in this presentation and in the pitch. Thank you so much. For any further communication, you may follow us on these social media icons, social media channels, and we look forward to supporting you in all your queries. Thank you so much.